Hello everyone, this is David with episode number 7 of ETF versus crypto experiment. Just to remind ourselves that the experiment was for a 12-month period where I was comparing dollar cost averaging 1,000 Australian dollars into exchange traded funds versus cryptocurrency, and we are over halfway through our experiment. This month was, in short, terrible for the broader markets as well as cryptocurrency, and there were lots of losses which we'll detail through now. So looking at the exchange traded funds, back on the 5th of January they were worth $7,561, which was an 8% increase. However, they actually went backwards during this time, so we were barely in profit, at a 0.53% profit on the 3rd of February 2022, which is today. And the crypto market's kind of having a higher delta compared to the stock market, fell even further. So looking at our Polygon Aave deposits, previously they were over $1,400 and had decreased to $1,100, and that was due to the large decrease in price of Bitcoin and Ethereum. So I think just 2 months ago, in episode number 5, Bitcoin was around about 56,000 US dollars, whereas now Bitcoin's trading at around about 38,000, having a low of about $33,000. So that's a 30% decrease, and that's really reflected in the current valuations. You'll remember from the previous episodes that I had actually leveraged a portion of the Polygon deposits, and the net value of this had decreased from $132 to $60 here, and the rewards, which I'm counting separately, are worth $79. Interestingly, you'll see that on the previous month, 12 curve was worth roughly $80, so giving an approximate per curve value of $6.50, and that had massively decreased. So instead of $6.50 now, it's almost decreased by 50% in value, and now it's only worth $3.40 in value. You remember that the second portion I had formally put into the DFIN protocol, which had decent farm decent farm APR at the time, but I moved that over to something a bit more solid, given the massive decrease in price of DFIN. Funnily enough, the DFIN price I think had previously been $1, $1.50. Most recently I checked it is trading at around about 12 cents, so that is a good 80-90% drop in price. So I'm glad that I got out of that, and even though the Polygon Curve LP might have lower APRs, at least the Curve token itself retains its intrinsic value better than some random altcoin. So anyway, the value of the Polygon Curve LP was 0.856 of LPs, so I've just crossed out the combined total, which was a combination of direct deposits as well as leveraged deposits. So the direct deposits that I put in from the stream 2 of the strategy is worth about $1,383, which had decreased from $1,559. Notice that the decrease of value in the curve versus the Aave strategy is less, given that this is buffered somewhat by the stablecoin USD. Given that there's stablecoins within the pool. So all up, you can see that there's been a good 20% drop from over $3,000 to $2,600. Again, this is all in American dollars, so that's not looking good for the crypto side of things. So the Phantom strategy, I switched over to Phantom at a roughly month 4, so I'm now actually 4 months into $4,000 Australian dollars worth of dollar cost averaging into the Phantom network. So the previous value was $717, and that had increased to $1,217, bearing in mind that I did put in approximately 1,000 Australian dollars or $700 US dollars into this amount. So this still represents an overall decrease in the value of Bitcoin and Ethereum. Geist deposits, I didn't My strategy for Phantom has been a bit variable, but overall I'm still purchasing roughly, splitting up between Bitcoin and Ethereum, and the Geist deposits they represent. I think this would be 2 months worth of Bitcoin and Ethereum deposits. So you'd be expecting roughly 2,000 Australian dollars or 1,400 US dollars worth of deposits here, and you can see that instead of 1,400 US dollars, I've got less than 900 US dollars there. This just represents the massive decrease in price that Bitcoin and Ethereum had seen, and even just between these 2 months, just between Bitcoin in February, which is today, it's $38,000, and previously had been $46,000. So that represents at least a 15% decrease within a month's time. And the final portion that I've been variably doing is farming within Abracadabra. Those people who are well familiar with the crypto universe probably know that there's been a lot of fear and uncertainty and doubt with Daniele's farms recently, and Abracadabra has certainly, the price of the spell token, which is I think the farm token for the Abracadabra protocol, has certainly taken a hit, and you can see previously it was worth 2 cents a token, whereas now it's worth well less than 1 cent. So that's roughly a 65% drop in value, and this reflects the general downturn in the January market, but also more specifically the fear in regards to any of Daniele's protocols. So my total gain from this stablecoin farming had previously been $5.74, and that decreased to $3.21. So all up, the value had of the Phantom side of things had increased from $1,800 to $2,100, although this does represent a loss in a fiat value when compared to the initial amount that I put in. Given that it's 4 months worth, I'll be expecting roughly $2,800 US dollars, and that had decreased to $2,100. So looking at our summaries now, so month number 7, cash would have been at $7,000, ETFs are actually at $7,027. So that's a 0.4% increase, and interestingly, the crypto side of things has actually taken a massive decrease and is now actually returning negative relative to cash. So we're actually negative 5% down. I'm not too worried about the long-term side of things, given that I'm pretty bullish on the cryptocurrency space in general. But it's humbling to see that what initially had been 47% increases had now decreased to return less than if I was to hold cash. And just comparing these red bars, they looked very good during these initial months and had plateaued off, and is actually decreasing now. So I don't really anticipate a speedy recovery. I think that things will move sideways for a bit, so it'll be interesting to see where we are at month 12. My intuition, I think, is that it will be round about the same as the cash rate, and it's only when we go into another bull market, say in a year or 2 years' time, that you'll see that grossly outpace the cash reserves. So just as an update of 3rd of February, just after I had, well, actually I haven't included it in here, but then my new values are roughly about $7,900, so which I'll add into the PowerPoint for next time. That's for the exchange traded fund sides of things, and then for Polygon, I've just updated the spreadsheet as well. And for Phantom, which I've just directly added in $700 US dollars worth into the Curve A Try crypto pool without any leverage. So we'll see how it goes for the next month, and we'll go from there. Thanks.